Hello everyone, good evenings. This is Zach here from Sifu, and together with me we have Dato Yu today. And if you are here watching together with us, appreciate if you can help me to click the like buttons for me, help me to share this out. Again, a quick disclaimer before we start this section. This section here, we are not doing any buy and sell call. So if you want to trade any stocks based on discussion in this section over here, make sure you get your own trading plan. If not, get advice from the professional. Now, today again, we're gonna share with you special topics. Market has slightly rebounded. Okay, at least for Bursa, lah, right? Since last week, at least because of opportunities. But there's one particular sectors or a group of stocks. Okay, still looks like haven't made much movement, which is from the oil and gas. And we all know that unlike gold prices, crude oil seems like they are still in downtrend. So in this section here, Dato will share with you, is there any hidden opportunity in oil and gas Bursa stocks? Okay, without further ado, I'll pass the floor to Dato to start our section for this evening. Dato.
Hi. Okay. Let me set the scene for you by first giving you an overview of what the global oil and gas sector looks like. People generally categorize them into four sectors. You have the upstream, or what is commonly known as the exploration and production sector. These are the companies actually drilling and producing oil. Then you have the midstream companies, basically focusing on transporting and storing their oil. In Malaysia, the midstream business is very small, but in the US, you actually have companies that owns oil and gas pipelines, and these are what I call the midstream players. They don't do anything else, but basically facilitate the transportation of crude oil, from the oil rigs to the refining sector areas. Then, of course, we have the refining sector, what I call the downstream, and this may include even companies like in Malaysia, you have Petron, okay, who owns the Port Dickson refinery, and they then actually go further down into distributing the oil and gas through the Petron brand. Then, of course, we have companies that actually provide services and equipment to all the three other sectors. Now, in the Malaysian context, the bulk of the oil and gas companies are actually in what I call the services and equipment sector. Now, what I like to do today is basically focus on the upstream. Okay? And in the Malaysian context, there are two categories of upstream players. As you can see, there are about 8 companies that I've classified into this group. The first group is the people who are actually directly involved in what I call the exploration and production activities. And then the second group are what I call people who provide the facilities, okay, to explore and produce oil. Okay, they basically own, for want of a better word, production factories, which they then lease to companies. Okay. And what they do is, unlike property developers who just lend you the building, they actually run the operations as well. So they actually have some relationship with what I call the upstream oil and gas producers. Now, in Malaysia, okay, and basically all else in the world, the real E&P guys are the ones who actually get the oil field reserves. Okay, that means they have a right to go and dig for oil, and they then put in the rigs and so on and extract the oil. Okay, now this is a high commodity business. Okay, and they take the risk, of course, because it doesn't mean that if you dig and you drill, you will find oil. So it is a high risk business. Okay, and this is a sector that has a very strong link between oil prices and their revenue. Now, apart from the people who actually drill and dig for oil, you have what I call the infrastructure operators, people like Yinsun or Petra, that have production facilities in the Malaysian context, these are generally floating production platforms. They lease the platform to oil and gas companies, or lease the, and then part of the lease is actually they operate the platforms. Okay, they extract the oil. Some of them would be a fee base plus a percentage of the oil revenue, okay, as part of their services. And I would like to think, because that this is part of the oil and gas upstream companies, because a big part of their revenue are then, over the long term anyway, are then tied to crude oil prices. So when you look at oil and gas companies, okay, especially those in the exploration and production side, you have to remember that they operate in a cyclical sector. Now, this chart shows you the oil prices since 1970s, okay? And you see that prior to 2000, it was relatively stable, okay? But over the past 20 years, we have several peaks and downs, okay? So if you look at it at the charts, there are 4 cycles over the past 12 to 15 years, okay? And each cycle lasts for 2 to 3 years, okay? And the thing to note is that at the bottom of the cycle to the peak of the cycle, your oil prices can go from $40 to $120. So it's a double or triple impact, The changes in the oil prices are very significant. You're not talking about plus or minus 10%. You're talking about hundreds over percent changes in crude oil prices. Now, if you're an E&P company, this has implications, because when you look at investing in these companies, the key is not to look at the current year performance or what it is. You look at the performance over the cycle. And this is the famous quote that I always use by Professor Damodaran, the famous valuation guy. And what he says is that if you forget this cyclical performance and try to extrapolate their performance based on where you are currently, you can get a wrong picture. And what he proposes is that you must look at the performance over the cycle. Okay. Now, there are several reasons why you should look at the performance over the cycle. The most obvious one, of course, is that their profits go up and down, depending on the crude oil prices. But more important, there are 3 other critical areas that people have not actually think about it when you look at cyclical stocks. The first is that, and I give you an example of what happens to Bumi Armada. In the downside of the cycle, okay, if you have to basically freeze your assets because you don't have business or you don't have contract and so on, the accountants will come in and say you have to impair your assets. And that causes a big part of your profits, So a lot of the oil and gas companies over the last 10 years went through this big impairment exercise. So it is not just because your revenue drops, but because you have this extraordinary impact, because your assets are not being able to generate the returns from the accounting perspective. So you have this asset impairment hit. The second one is that, and I use Sapura as an example, when the oil price drops and you have financial problems, you lose major contracts because you are not then able to get funding to take on the big projects. So you're hit not just because your current resources drop, but you can't even tender for new projects. And this is what happened to Sapura. They lost businesses because of their financial position, resulting from the low crude oil prices, and they lost contracts because of that. And of course, the most dangerous for shareholders is that when you have impairments and you have lost contracts and so on, and the company actually goes under, like what happened to Perdana Petroleum, you have negative shareholders fund, you have to restructure, and new shareholders comes in, and if you're an existing shareholder, you lose your money. So the cyclical impact of the oil and gas sector is very important, not just because of the revenue going up and down, but you have these write-offs, you got this restructuring exercise that can make a big impact on your business. So that's the first thing I want you to remember. Now, the second thing is that when you look at the sector performance, okay, I've mentioned earlier, from 2010 to about 2024, you got 3 or 4 cycles. You can see, okay, the revenue being cyclical. Now, this is the picture of the 8 E&P companies. The brownish line, the orange line is the upper quartile. The gray line is the median. Okay, that means the companies at the 50% level, and of course the blue line is the lower quartile. And you can see that over the past 15 years, revenue grew at about 7% compounded annual growth rate, okay, for the median companies. But when you look at the profits, okay, although there was revenue growth, there was hardly any profit growth. Okay, so if you are a company in 2010, okay, your profits today is about what it was, 15 years ago. It's not exactly a fantastic business when you look at it over the cycle. The other thing that I wanted to show you is that when you compare the performance of the company, okay, and this is looking, the blue line is the average PAT compared with the Brent crude oil price, you find out that there is about, over the past 15 years, about 58% correlation. Not fantastically high, because high would be, to me, would be something like 70 to 80%. But again, good enough to show you that there is a very strong link between crude oil prices and the company's performance. Now, part of the reason for the low correlation is because half of the companies in this panel are what I call the infrastructure provider companies. Okay, so they are not the real E&P guys, but if you look at the real E&P guys alone, the correlation would be higher. Now, similarly, there is a very strong correlation, okay, between the sector returns and crude oil prices. And one of the sad things about this sector is that when you look at it from a return of equity perspective, the return in 2020, for example, okay, is much higher than what it was today. Okay, in fact, in 2010, if you get 20% for the median companies. Today, your return is only half. Okay, so if you are an investor investing for long term, basically your value in the company actually came down by half. Okay, the return on equity over the past 15 years, okay, has dropped by half, from 20% to an average of 10%. Again, when you look at the return on equity and the crude oil prices, you find out that there is actually a very strong correlation between the returns and the crude oil prices. So what you mean is that when you look at the performance of the company, okay, look at them over the cycle. And one of the things that you have to remember is that because of the impact on impairments, on write-offs and so on, when you look at cycle companies, I always pay attention to the financial position, because in the downturn, if you are not financially strong, you will get into trouble. Okay, and you can see that in 2010, for example, the leverage is very high, 200% to 300%. A 200% means that effectively half of your assets are funded by by debt. Okay, so you can have a debt equity ratio of 1:1 to get 200%. If it's 300%, that means 2/3 of your total assets are funded by debt. Okay, so you can imagine this high debt position. When the crude oil prices drops, you don't have enough profits. You then have problems paying your interest, and that's where a lot of the oil and gas companies went into trouble. Okay? It is a financing problem, okay, and not just an operational problem. So again, this is looking at it in terms of the debt equity ratio. You can see that historically the big companies are very high debt equity. Okay, and even today, although they have come down, okay, the big companies have 1:1 ratio. Okay, the smaller companies are a bit better. Okay, I'll come back to again on this debt equity ratio later. Now, what I'd like to talk about is focus on 3 companies, and I will use the fundamental mapper, okay, as the starting point. Now, the fundamental mapper is something that we created to position companies on a matrix where the horizontal axis represents the business performance and the vertical axis represents the investment risk. And then we group them into 4 cells, okay, based on this business performance and investment risk. So if you are on the right-hand side, it means that your business performance is strong. If your companies fall on the left-hand side, it means that your business performance is not so good. If you are near the top, it is a high-risk investment. If you're at the bottom, then it is a safer investment. Now, what I'd like to do today is focus on 3 of the upstream companies, Armada, Petra Energy, and Yinson. Okay, and you can see that, like I said, of the 3, Armada is probably the strongest in terms of business performance because it is the most to the right. In terms of investment risk, Yinson is a bit risky compared to both Armada and Petra Energy. Okay. Now, I'll explain again a bit later why the rating falls into this position. Okay. But let me go a bit background into the companies. Now, Bumi Armada was basically in the what I call the oil field support vessel business 15 years ago. What they had was plenty of ships supplying equipment, ferrying people and so on from the shore to the oil rigs. Okay, and they grew the business on what I call OSV, offshore supply vessel business. But over the past 15 years, it has positioned itself. It actually closed down the division, okay, because of the downturn in oil and gas, and went into what I call the floating production storage, business, where basically they have ships that does the processing of crude oil. That means they park the ships near the oil field, they process the oil, and then they transport it back to shore. Okay, so that's basically Bumi Armada you have today. The business today is very different from what it was 15 years ago. Same thing when you look at Petra Energy. Again, 15 years ago, it was basically very strong in support services, shipping, doing what I call oil field support services. Today, they have gone upstream. They have got some production facilities. And when you look at Petra Energy today, you cannot compare with what it was today because the business profile is again different. Now, I'll again come back to this important point. Now, Yinson, 15 years ago, was basically a transport company. It's a logistic company with a lot of what I call lorries and so on. And over the past 15 years, they went from what I call road transport into producing already renting ships and producing using the ships to produce oil and gas on behalf of their clients. So today, Yinson is fully a oil and gas production company because they have effectively sold off their logistic arm. Okay. So when you look at these 3 oil and gas companies, the important thing to remember is the business today, even if they were in oil and gas 15 years ago, is very different from what it was 15 years ago. And that has implication when you try to look at their performance over the cycle. Okay. Now, I'm not going to go into details, but what I've done is that I've looked at the revenue trends for these companies. I've looked at their profits. I've looked at their returns. I've looked at the leverage. And what I want to show you is how the 3 of them stand relative to each other, okay, in terms of top-line growth, returns, and the financial strength. Okay, so when you look at revenue growth, Yinson has the top here means that Yinson has the best growth relative to Petra. When you look at returns, Yinson has better returns compared to Petra and even Bumi Armada. And then when you look at financial strength, then you find out that actually Petra is stronger than Yinson in terms of the financial strengths. Okay? Now, this is giving you a picture of what I call their business fundamentals relative to each other. If you want to know a bit more of the actual numbers and so on, I'll post it later in our chat groups and so on for you to actually go and look at the numbers. Okay? Now, the important thing I want to say is that when you look at the performance of the cycle, okay, and when you're trying to look at it from what I call a fundamental perspective, the key of fundamental investing is that you want to invest in companies when their market price is lower than the business value. So the key, of course, is then trying to estimate the business value. Now, the challenge with estimating the business value is that, especially if you look at the cycle company, is that the cash flow changes over the cycle, the discount rate changes over the cycle. So the question you ask then is, what represents the business cycle? Okay, and let me illustrate what I mean. This is the chart of the crude oil prices. Okay, and if you're trying to look at the cyclical performance, one way is then say, hey, let me look at the past 10 years performance, because this is at least 2 or 3 cycles. So if I can take the average performance over the past 10, 15 years, I've covered at least 2 or 3 cycles, and I know that whatever I get, the average values would then represent the cyclical value. The challenge with the 3 companies is that the business 15 years ago was very different from what it is today. So when you look at the cyclical performance, you don't get a real picture of the current performance, okay? Because 15 years ago, they were in different business. So that's the challenge with these 3 companies, because the business strategy has changed over the past 15 years. Now, the other way, of course, then is to say, look, if I cannot use the past 15 years performance, can I look and say, hey, if this is the cyclical pattern, okay, 2023, 2022 looks at about the average cyclical performance. So can I take the current performance, 2023, as a representation of the performance of the cycle? Okay, so that's what alternative way of trying to get the cyclical performance. Now, to give you an example, if I look at the performance over the past 15 years, okay, so the price is the market price, I think, as of last week. I calculated the average earnings per share over the past 15 years. So Bumi Armada basically broke even if you look for the average earnings per share over the past 15 years. Petra had 4 cents a share, Yinson at 12 cents a share. And then when I calculate what I call the cyclical PE ratio, okay, of course, you can't calculate with Bumi Armada, but Petra was a PE 29, Yinson is 15. Okay. Now, for a lot of other oil and gas companies like Shell, the multinationals and so on, a 15 years or 10 year cycle will give you a good picture because their business have not really changed that much over the past 15 years. But in the case of these 3 companies, I've already shown you that, Bumi Armada, Petra, and Yinson 15 years ago, okay, is very different from what they are today. So this does not actually give you a good cyclical picture. The best cycle picture is then look at the past 2 years' performance, okay, and say, hey, based on the past 2 years, what was the average earnings per share? And based on this, look at their current PE. So when you look at the current, and assuming that this 2023 and 2024 represents the cyclical performance, then the price earning ratio today looks very reasonable. Okay. Normally, if I can get a PE less than 10, I would assume that it is a very good picture. Okay. The challenge with looking at this average PE is that this one here assumes that the cycle is short and none of the companies are going to go through an impairment exercise. Okay, so this PE, my warning here is this P assumes that the current cycle is not going to drawn out, so we'll probably recover within a year or two. But if the downturn lasts for 5 years, I'm very sure that there is going to be one or two impairment down the road. Okay, so if there's impairment, then your earnings are going to be impacted. Your PE then goes up. Okay, so if you believe that the cycle is going to be within a year or two, then any of these three companies, okay, is a good bet. But if you think that the oil and gas cycle, the downturn, and you believe that, President Trump is going to be there for 4 years, and we're going to have 4 years of volatility, and the oil price is going to be down for 4 years, then I think this is then probably you probably have to factorize in some of the asset impairment, and I suspect these numbers will then go up. Okay, so that's the picture. Now when you look at which to invest, okay, this is just looking at the valuation. I want you to look at this and then go back and look at this. Okay, so you then have a picture of the comparative fundamentals. Okay, and then you compare it against the valuation. Okay, and you find out that, okay, in terms of financial risk, Inson is probably the riskiest. Okay, but in terms of, sorry, where is my? In terms of the P ratio, okay, higher financial risk, higher P ratio, these two, conceptually, I wouldn't think that this is a big difference. Okay, 5, 6, 7, they are about the same. Okay, okay. The question is, if you are looking at oil and gas companies, and if you're not sure how long the down cycle will last, my focus will be on financial strength. Okay, revenue growth, profitability is probably if they are about the same, I wouldn't worry about them. I will look at the financials. Okay, and I'm telling you because of personal experience. Okay, let me tell you this story. I happen to invest in Sapura Energy. I went in when the price declined substantially. Okay, I didn't go in at a high price. I went in when the price declined substantially. I went in when PNB became a major shareholder. Okay, before the rights issue, and my view was that when I look at the numbers, my view was that, hey, with PNB providing the financial backing and so on, the company would be able to write out its poor financial performance. Okay, unfortunately, the price dropped further after I've gone in because, as you know today, they have gone into bigger trouble. Okay, they are now having to restructure and so on. Okay, so that's my 2 cents worth. My experience with going into a company thinking that the financial strength, thinking that the oil and gas cycle will be shorter than what I expect. Okay, it took longer, and because it took longer, the assumptions on this financial strength all went haywire. So, if I were you, if you're looking at oil and gas companies, okay, and this looks good at this current point in time, okay, choose one where you look at the financial position. Okay, don't look at the profitability and the growth, because at this point in time, okay, we don't know how the future is going to turn out. So basically, that's my overview of the oil and gas sector. This is, of course, just looking at the exploration and production companies. If the oil prices remain low over the next 2 to 3 weeks, I will then have a look at the services and equipment company. okay, because there are also opportunities there, okay, in that sector, okay. But have a look, okay. It is an interesting sector, okay, notwithstanding my poor track record with Sapura. I must admit that although I got burnt in Sapura, I made up for the other oil and gas companies. Okay, so it is an interesting sector. Look at it from a cyclical perspective. Don't look at the current price. Don't look at the past year's results. Okay, because the oil and price then was very high. Okay, look at the performance of the cycle. Okay, now I've given you a picture of the fundamentals. I've given you a picture of the financial risk. And I hope that you can understand why now, okay, Yinsen has a bit more investment risk relative to the other two, okay. The fundamental mapper, unfortunately, looks at the business performance over the past 6 years. We are assuming that the next 6 years will look like last 6 years. If it is, then this picture remains valid. But if you think that the next 6 years is going to be better, okay, then you will find out that you have. I would tell you that you look at the companies in what I call the gold mine quadrant, those which have strong fundamentals, like Armada or Petra Energy, and with low investment risk. That will hedge your bets. That's basically what I'm going to say. Like I said, disclaimer, this is for educational purposes only. And for those of you who have not downloaded the fundamental mapper, do it, because I think it will give you a shortcut way to understand what is happening on the stock market. All right, thank you, guys.
Okay, thank you, Dato. Yeah, Dato, actually, we got a few questions over here. Okay, probably we start with the first one. Okay, why is the E&P segment considered the most direct play on the change in crude prices?
Well, you see if you okay, because I do a lot of correlation analysis between all the various oil and gas companies and crude oil prices, and what I found is that for the E&P companies, because they're actually upstream, okay, the immediate changes, if for example, if crude oil price changes this year, you can see immediate impact on their revenue and earnings, because their revenue and earnings are very tied to crude oil prices. Now, if you are a equipment and services company, your business is actually dependent on the capex expenditure of oil and gas companies, and historically, the capex expenditure comes, decided, a year later. So if today the oil price crashes, your capex next year and next few years would be cut. So your impact for the equipment supplier companies will be in 2 or 3 years' time, and not this year. So if you're going to invest in what I call the upstream companies, the current oil prices, okay, play a very important role immediately, because if it goes down, you expect your performance to go down. Okay, you can't run away from it. It's a very immediate one. So if you're looking for oil and gas companies, the upstream one, focus on the oil prices. Your bet is essentially a bet on the oil prices. If the oil prices goes up, okay, your stocks will go up, provided, of course, you buy it at a price that's not below their long-term value.
Okay, noted, Dato. Okay, there's another question from Sweet Kid. He asked that what is your view on Sapura Energy?
I will tell you the story of Sapura. Okay, I'll give you an analogy. Imagine that you have a business of worth $100 million, and you go out and buy another business that is another $100 million that can generate 10 million profit a year. But instead of paying $100 million, you pay $200 million. And on top of that, instead of just paying $200 million, you borrow the $200 million to buy the company. Okay, so in your books, then you have bought a company a bit expensive because you bought it at a high price. You bought it with loan, and then when the crude oil prices declined and stayed down for a long time, your business is affected, your revenue drops. But when your revenue drop, what you owe to the bank does not drop. Okay, you continue to have interest payment, and then you got interest payment problem. Okay, you become insolvent, and that's basically, if you ask me, that's the problem with Sapura, that they overpaid for a lot of the businesses. They borrowed to buy the businesses, and unfortunately, the stock price crashed, and the crash lasted longer than anybody expected, and they are stuck with interest payments lah. So basically, what happened was they were just generating profits to pay the interest, and as time went on, it got worse and worse, and now they have to go to be restructured lah. And unless you're it's a very sad story. Unless you're an expert in financial restructuring, okay, even though it is very cheap today, it is not a company for the layman, okay. Because I will tell you what's going to happen to my stocks. In a restructuring, the existing shareholder will take a haircut. We have to take a haircut. Okay, I don't see how you're going to do a restructuring without both the lenders and the shareholders taking a haircut, because that's historically what happens in a restructuring. So Sapura is going through a restructuring. It is not that the business is no good, okay? It is the financing structure that's killing the business up. So you got too much borrowings, your interest is killing you. You're just generating money for the banks, and the only way to do that is to restructure. Okay, you overpaid for the business. That's why they had to write off a lot of the business. Okay, write down the value of the business. Okay, and when you write down the value of the business, your shareholders get hit. So it is unfortunately, if you bought it and the oil price continued to go up, then he would be, Sapura would have been a darling, and say, wow, what a fantastic business. Unfortunately, crude oil prices drop, and I think, if you ask me, I think management forgot that it was a cyclical business. So they bought the companies when the oil price was high, and of course the buyers basically sold the companies at a high price. Okay. Thing collapsed, and we're stuck with it now. So today it is trading cheaply, very cheap. Okay, but because of the restructuring exercise and so on, it is not a stock for the normal retailer to actually go in and hold for the long term.
Okay, thank you. Okay, thank you, Dato'. Oh, actually, I just realized Sapura is 4.5 cents. Okay, it's very cheap right now. Okay. Now, Dato', one more question, last one. What should we look for when investing in this sector?
I hope I've shown you that when this is a cycle sector, okay, and especially if you're going to invest in the upstream companies, you are basically taking a view on how long the cycle would last. Okay. Now, we all don't have crystal ball, and I would suggest that even if the company is now trading below what your estimated value is, look at the financing. Look at the financial strengths, because in a cyclical sector, if your downturn is longer than what you expect, you're going to have a lot of negative things, just like the impairments, loss of business, restructuring, and so on. So look for companies with financial strength. Okay. Ideally, it's a company with either zero borrowings, because then they don't care about what happens to the business, because you don't have the banks chasing you. But those which have high debt equity ratio, okay, these are the companies that you should ideally try to avoid now, because they're going to have not only do they have to worry about operational problems in a downturn, they have to worry about financial problems. So when you look at cycle companies, there are two key lessons. First, of course, is you look at the performance of the cycle to estimate the value. But more important, look at financial strength, because that's the most important thing. Okay.
Okay, thank you, Dato. Okay, any other questions from the audience? Okay, if you've got any questions regarding value investing or even oil and gas stocks, well, you are welcome to comments below, and Dato will help to answer your questions. Okay, if not, it's okay. You can always post into our Seafood Telegram. Okay, so once you got any question regarding value investing, including fundamental mapper that I think just now Dato shared with us, I will also forward the question to Dato. Then probably he will cover in our upcoming section here. Okay, so let's say there's no questions. We'll end our sections for this evening. So Dato, we're gonna have another section 2 weeks from now.
Yep.
Okay. So once again, thank you, Dato, for sharing with
Okay.
us today this section over here, and we will see you in the next section. Okay. So please join our Telegram. So I will post it into our Telegram regarding the details for the upcoming section together with Dato. Thank you, Dato. Thank you,
All
everyone.
right. Good night. Good night.
Good night.